When you ask me about in the near term,
Right.
I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case.
He's always stuck to the line of, we're data dependent. We'll see what happens. Anything can change. This is the first time he's basically forecasting what's going to happen in the next 6 weeks with some real certainty that is almost one kind of a blessing for the market because they can now price this in. But in other ways, it kind of backs them into a corner. There's so many things that can happen in just 6 weeks' time. You can have a change in the electoral politics. You can have this idea that Super Tuesday over in the United States comes before the next Federal Reserve meeting. That could cement President Trump as the leading GOP candidate. And the market could suddenly start to price that in as the base case of what happens in November. You could have tensions in the Middle East start to change very, very quickly. It's an evolving situation. Secretary of State Antony Blinken saying it's more volatile than it's been in decades, and that's something that they're actively dealing with as well. Not to mention this kind of unsatiable demand for bonds at the moment. You have never seen so many people run for the exits when it comes to the equity market, but then also really want exposure to this kind of rate cut narrative that has almost been cemented in stone. Except the question is there enough supply for everyone to get a little bit of the action? And so many things, again, could go wrong that could then change the inflationary dynamic. It's interesting that he chose now to kind of pin a timeline.